Welcome to The Big Story. I'm Olivia Quay. Subscribe to the Straits Times channel so you never miss an episode. Financial markets globally are reeling from a series of closures and stock plunges, and banks in Singapore are starting to see some of the effects. Local bank stocks slumped when the market opened this morning following a plunge in the shares of Switzerland's second biggest bank, Credit Suisse. DBS, OCBC, UOB and the Straits Times Index all down following the plunge, as well as fears about a wider financial contagion globally amid a string of US bank collapses. The banks took a significant hit around midday, but made some recovery just before closing. Credit Suisse sank as much as 30% on Wednesday. That follows the collapse of US mid-sized lender Silicon Valley Bank, as well as the closure of Signature Bank in New York State over the past week. Journalist Prisca Ang joins me now. With local bank stocks tumbling this morning, what does it mean for banks and their depositors, Prisca, like you and me?
The stocks of the three local banks, DBS, OCBC and UOB, tumbled today. Investors are nervous as banks will potentially have to grapple with the fallout from the Credit Suisse crisis and the string of US bank collapses over the past week. These events have led to fears of contagion in the banking sector, and some worry that it could be an echo of the 2008 financial crisis. But depositors do not need to worry too much, as there are various differences between the 2008 crisis and the current situation. For example, the recent US bank collapses are closely linked to specific industries that were facing significant funding, regulatory or legal pressures. Meanwhile, the Singapore banks differ from Silicon Valley Bank as well as Credit Suisse and similar banks when it comes to their client base. Credit Suisse's customers are primarily wealthy clients and businesses, while Singapore bank customers are mainly the everyday savers and SMEs or small and medium-sized enterprises. That's according to Phillip Securities research analyst Glenn Thum. The overall risk and exposure that Singapore banks have to recent developments is therefore limited. They also have conservative balance sheets and maintain capital adequacy ratios that are above the minimum required by the regulator here. In other words, they are well positioned to withstand stress from global financial developments. However, Mr. Thum noted that the recent collapses and news would impact the overall market, and there might be a further slowdown in loans growth, which could affect the growth of Singapore banks.
I see. Well, Prisca, what are the links, though, between our local banks and foreign ones like Credit Suisse, such that we should be concerned about this financial contagion?
Credit Suisse is one of 30 global financial institutions that are deemed to be systemically important by the International Financial Stability Board. These banks are seen as too big to fail. Their risk profile is therefore so important that if they do fail, it could trigger a wider financial crisis and threaten the global economy. So, Credit Suisse's failure could have repercussions on the global financial sector, including Singapore banks. These include counterparty risks, which refer to the likelihood of a party defaulting on contractual obligations in investment, credit, or trading transactions. But these risks have been mitigated by a lifeline provided to Credit Suisse by the Swiss National Bank. Credit Suisse announced this morning that it will borrow up to 50 billion Swiss francs from the central bank, adding that it was taking decisive action to preemptively strengthen its liquidity.
So, Prisca, final question. What are authorities and banks here doing to allay any fears? And is there anything we can do on a personal level to protect ourselves from the fallout of any bank crisis?
Singapore's central bank, the Monetary Authority of Singapore, said in response to the US bank failures earlier this week that it is closely monitoring the domestic financial system and international developments. It also said it is ready to provide liquidity through its suite of facilities to ensure that Singapore's financial system remains stable and financial markets continue to function in an orderly manner. The local banks have not responded publicly to the latest Credit Suisse developments.
Well, thanks so much, Prisca. That was journalist Prisca Ang. In other news, young tech professionals from Singapore and Indonesia will be able to work and gain experience in each other's tech industries. This is part of a new agreement signed by both countries at the Singapore-Indonesia Leaders Retreat. Prime Minister Lee Hsien Loong says he hopes that it will help strengthen cooperation within the region in this emerging sector.
President Jokowi and I also discussed new areas of cooperation. First, on the digital economy. We signed a Memorandum of Understanding on the TechX program today. This will allow young tech professionals from Singapore and Indonesia to undergo work exchanges and gain experience from each other's tech industries. Our tech cooperation will strengthen ASEAN collaboration in this emerging sector, and this includes working towards a digital economy framework agreement under Indonesia's ASEAN chairmanship.
The MOU for the TechX program is one of 6 new agreements signed at the retreat, with the other MOUs focusing on renewable energy and sustainable urban and housing development. Singapore will support the planning and development of Nusantara, Indonesia's future capital, as well as a smart and sustainable city. Both countries will also promote the exchange of information, knowledge, data and technology in the health sector and explore new areas of collaboration in urban search and rescue capacity building. The meeting also saw both leaders discuss regional developments, with PM Lee expressing regret at ASEAN's lack of progress with the situation in Myanmar. He assures that Singapore will do its part to help Timor-Leste through the process of becoming a member of the regional bloc.
On Myanmar, we both regretted the lack of progress in ASEAN's 5-point consensus. Singapore will continue working with Indonesia and with ASEAN members, plus ASEAN's partners like the UN, to push for the full implementation of the 5 points of consensus. And we'll also work with Indonesia and ASEAN members on the roadmap for Timor-Leste's ASEAN membership, and do our part to help Timor-Leste prepare for the obligations and commitments which it will take on when it joins ASEAN.
And we are back at the top. Changi Airport is once again the world's best airport for the 12th time, regaining its crown after losing out in 2021 and 2022 amid the COVID-19 pandemic. It beat Doha's Hamad International Airport, which was top in 2021 and 2022, and now lies in second, while Haneda Airport in Tokyo is third. Fourth is South Korea's Incheon International Airport, with Charles de Gaulle Airport in Paris rounding up the top 5. Changi is also best in Asia, best in the world for leisure amenities, and best in the world for airport dining. Meanwhile, Crowne Plaza Changi Airport is the world's best airport hotel for the 8th year in a row. The World Airport Awards were given out based on a global survey conducted by research firm Skytrax between August 2022 and February 2023. On land, drivers heading into Malaysia and Singapore via the TUAS checkpoints during off-peak periods can expect toll charges to go up. The adjustments follow Malaysia's recent revision of its toll charges at the second link. According to the Land Transport Authority, the changes are in line with what it says is Singapore's long-standing policy of matching Malaysia's toll rates. Well, the charges will be revised from the end of March. There's currently a discount from 80 cents to as much as $9.30 during off-peak hours, which are from 10 a.m. to 3 p.m. and 11 p.m. to 5 a.m. But from March the 31st, the current peak period rates for respective vehicles will be extended throughout the day, scrapping off-peak rates. A woman linked to the 2021 Tanjong PAGAR car crash that killed 5 men is facing a dangerous driving charge. Pu Yilin had driven the white BMW M4 just before the crash, which happened at around 5:40 a.m. on February the 13th. According to court documents, she allegedly drove the car at a speed of 109 kilometers an hour, more than double the 50 kilometers per hour speed limit for the stretch along Tanjong PAGAR Road. She alighted before the car's owner, Jonathan Long Chun Wei, took the wheel, and he clocked speeds of up to 182 km/h before plowing the BMW into the pillar of a shophouse, killing him and his 4 passengers. Well, those are our top stories today. Visit straitstimes.com for more news and our YouTube channel for more videos. Subscribe by hitting the red button below. I'm Olivia Quay, and I'll see you tomorrow on The Big Story.